Hi everyone. Hi Celeste.
Hi.
We are coming to you live. We got a few questions about the JobKeeper. Obviously, in the last few days, everyone's getting anxious, and there's a whole lot of information coming out from the ATO, and there's a whole lot of information coming from different sources around the internet, and lots of different people saying they're getting this and they're getting that. So we thought we'd clarify that with this live right now. So hopefully you can either watch it now or comment later or take action on it later. Obviously, these are always available for you on YouTube, so you can always grab it and share it with friends.
Yep. And I just want to note that like there is so much information, but I'm quite pleased with the information, the way they're giving it out at the ATO level. Like it's pretty good to interpret. So like I highly advise after, watching this to go to that ATO website and just search up JobKeeper and you'll find all the resources in there. So yeah, so the prompt tonight was we're getting asked, well, how do we work out our 30% downturn? Like, what does the ATO want to see? What sort of documents are they looking for us to present as a business owner? So Clayton's got some templates that he's just going to, or some visuals for you to run through to show you in a demo of what that looks like.
And I think that's crucial. Like, a lot of people aren't sure on how to run it, what they're running. So this is just based off the information we have at the moment. So obviously, the more information we get, the more we'll be able to help. But right now, at the moment, this is an example in Xero. So we love Xero, clearly. So run a profit and loss. So you're comparing your periods. So one of the first things you probably need to do is go to the ATO and go through those steps and see if you're eligible. So one of those steps is, are you an eligible business? Have you had that 30% decline? Let's figure that out right now. So basing the information at the moment, it's based on GST, the GST Act, and it's going to be on an accruals basis. When I talked about accruals to Celeste, she said, what are you talking about?
Yeah, that's right. So, yeah, usually when you're a small entity, you're doing that cash basis, but the ATO has specified it's got to be accrual. So, yeah, Clayton's going to show you where those settings are.
So if you're a small business, sole traders, usually you're on a cash basis. You're probably reporting your BAS on a cash basis, your tax on a cash basis. So usually you're looking at this cash button here in Xero, and then you're running your information on a cash basis. But for the GST Act, at the moment, for all the information we're running, it's saying accrual basis. So you must select accruals. Cool. You can obviously look at different ways that you can report this, but we're just going to compare April this year to April last year. So this report's showing 1st of April 2020 to the 30th of April, showing that the demo companies got sales of $9 grand. The problem with this is the ATO wants you to compare this year to last year. So it's got to start from the 30th of March. So seeing where you lie in that regard to project out what your sales will be. Now, I've prepared for you earlier is the last year's on accrual. So I'm going to run that, and boom, you can see that we had 60 grand's worth of turnover last year. So it's on the top line on the sales, and this year we're down to 9, and that's 9 for 2 weeks into April. So therefore, boom, we're not going to get, we're going to be way under our 30%. So therefore, we should be an eligible employer. So therefore, the next steps will be go through that ATO checklist that we shared today and work out who your eligible employees are. Now, we know that we missed the first 2 weeks of this process, so not to stress. Obviously, everybody's missed the 2 weeks, and the ATO, you got some information on that, Celeste, today?
Yeah, and the good thing was that the ATO have used common sense rule, apply it, and said that pretty much as long as you are, for those eligible employees that you have, for the eligible businesses that are eligible for JobKeeper, is that as long as you've paid them that $3,000 for that month from the 30th of March to the 26th of April, which is 2 lots of fortnights, that's 4 weeks, and you can prove that to the ATO that you've actually done that, then they'll take that. So there's no need to rush around and try and, yeah.
Sorry, so you'll be able to do a catch-up payment, basically.
Yeah, basically, yes.
So do like a monthly pay run for all of the additional money you've got to pay to catch that up to help your employees out.
Yeah.
Get them on board. So with those comparisons, so you got to project out your turnover from either April 2020 to April 19, or the quarter of April 2020 and the quarter of April 19. So it could be the March quarter with the March quarter, but you've got to be able to prove that 30%. And then once you're in, obviously one of the key things here, Celeste, is if you're not sure, definitely be talking to your accountant.
Absolutely. If you haven't already spoken to your accountant, like just email them, call them, get that advice you need, because this could be a very costly mistake of A, you miss out because you never apply, or B, you apply but you were never actually eligible. So, and this is a service that we're providing our clients, that we're going to work through with them and see whether they want to do it themselves or whether they want some guided help through this process, because there is risk there.
Excellent. So if they just want to book in, just go to our website, book a meeting. It'll take you here. You'll be able to pick proactive accounting meeting, and then simply pick the time that suits you, and you can work through it with us. So if you're interested in doing that, by all means, jump online. We'll quote it up and help guide you through that process. And as Celeste said, it could be a super expensive mistake. If you've got, 4 employees, it's costing you $6,000 a month. And then if you're not eligible, you're not going to get that $6,000 back. It's going to be a very costly mistake. So make sure that you're eligible for all of your things. Also, we've noted a lot of different information going around on the internet trying to get extra money. If you are found guilty by the ATO, you will have to, 1, pay it back, and 2, you could get yourself in a lot of trouble. So make sure you're on the right side of that as well. And if you're not sure, call your accountant, talk to them.
Yeah, absolutely. All right, so this was just short and sweet. Just wanted to get that information out there so that businesses can continue, or business owners can continue to read up on the information that is there, and start making these types of assessments themselves to see what they want to pursue. So all right, no worries.
Thanks, Liz. Thanks everyone.
See you everyone. Bye.